What's up everyone, welcome back to another video with the Millennial Finance. Over the last few quarters, the US dollar has been exceptionally strong. The DXY is an index that tracks the USD against a basket of foreign currencies and it's currently up 17.5% this year. That is a pretty crazy return considering the fact that I don't think any other or many other asset classes come close to these kinds of returns in 2022. And it's pretty ironic given the fact that the US is currently going through historically high inflation rates, which technically means that $1 should now be worth less. However, the USD has just blown away all other foreign currencies in the last 1 year. But why is this happening? So today, we'll be talking about some of the things that may have caused the USD to be so strong this year, and as a bonus, we'll also talk about why the Great British Pound and the Japanese Yen have been extremely weak. Cha-ching! Disclaimer as usual that whatever I say in today's video is not financial advice. I'm not even giving advice anyway because this video just aims to explain what's going on right now. Also, I don't trade currencies and I don't make any investment decisions based on the currency prices, so this video is purely for educational purposes. Anyway, let's get started. For us Malaysians, we might be left thinking why our currency is so weak against the US dollar right now. 1 year ago, $1 was trading at 4 ringgit and 18 cents, whereas today, the same $1 is now 4 ringgit and 64 cents. This is a massive move. It's not something that happens often, especially since we're talking about the forex market. If we don't follow any global news, we might be assuming that Malaysia is currently in a very bad state economic-wise, and that is the reason for the Malaysian ringgit's downfall. However, the US dollar has just been a lot stronger than every other currency. If, for example, we compare the Malaysian ringgit to the Australian dollar, then we can see that the exchange rate has been pretty stable over the last year, trading in a range. And this is a similar story for most other currencies. If we compare to the Malaysian ringgit with other currencies, yes, we may have been falling back over the last few years, but in the last 1 year at least, we haven't really lost that much ground. So, if it's not just a matter of the Malaysian ringgit being especially weak, then why is the US dollar so strong? The first clear reason that the US dollar is performing very well right now is the fact that the Fed has been extremely hawkish. Most of us are probably already familiar with this story, but in 2022, the Fed has gone crazy in hiking rates of their country. At the end of 2021, the Fed rate was hovering around the 0.1 to 0.15% mark. This year, we are already at the 3 to 3.25% mark, and we are expected to hit the 4% mark before the end of the year. That is a massive increase in interest rates that was decided by the Fed to counter inflation. We know that this decision by the Fed has caused our investments in stocks, crypto, and many other asset classes to crash, but why is it helping the US dollar gain in price? So the thing is, when interest rates are high, we as borrowers pay more on our loans. However, this also means that the US government is paying more for their loans and investors can get a better return when investing in bonds or treasuries. Since the US is a global powerhouse and investors around the world look there for investments, there has been a massive increase in investment inflow into the country. Investors have simply taken out their cash from foreign investments and decided that they want to park it in the US. To do so, what they had to do was they had to sell their foreign currency, purchase USD or convert it to USD to make these investments. Think about it this way. If I can get a 4% per annum return on US bonds that is technically backed by the government, then why would I take the risk of putting this money into a less stable country, or even why would I put this money into a riskier investment like stocks? For example, the 2-year US Treasury yield right now hovers at the 4.25% mark per annum, which is pretty crazy. So knowing the fact that I can get such a good return for a relatively safe investment, what would I do as an investor? Well, the simple answer is I would take my money away from other countries which may be less stable, or even take my money out of riskier investments like stocks and put it into US government bonds, which means I will have to purchase US dollars. This led to the drop in prices for stocks, crypto, and many asset classes, and it also did bring the USD to higher ground. Although it can't exactly be measured, this is probably the main reason of why the US dollar is performing so strongly right now. To add on to this, other developed nations who have supposedly stable economies are actually faring much worse off than the US. For example, the entire Europe is going through a massive energy crisis and is also probably going through an economic recession right now. Most other countries have also been a lot slower to hike their interest rates compared to the US, and some are still completely refusing to even hike it once, but more on that later. Also, in times when the economy is just very unstable and people don't know what's going on, investors tend to flock to the safest investments that they can find, and the fact of the matter is that right now is the US dollar. Despite what we say about gold, Bitcoin, stocks, or bonds, the USD is clearly the first place that investors look to when things go south. On that note, there's actually one country that is doing particularly well against the US dollar, and that is our neighboring country, Singapore. Over the last 1 year, the Singapore dollar has only lost about 6% of its value to the US dollars compared to more than 15% for most other currencies. A big reason for this is that the MAS, which is the equivalent of the Fed in the US, has also been very aggressive in hiking their interest rates. This seemed to be the key for them, as looking back, it seems like all other countries almost had to match what the US Federal Reserve was doing in terms of their interest rates. If they don't, they will be punished, and speaking of this, I'll talk briefly about why the GBP, which is the UK's currency, and the Japanese yen has been performing extremely weak in particular. Starting with the GBP, we already know that they are currently going through an energy crisis, so that's already one bad thing going for them. However, things really escalated and it got much worse for their currency when their newly introduced government decided to bring about their mini budget. Immediately after this announcement of their mini budget, the GBP reached a low of $1.03 with a 5% drop in that day itself, bringing them to its lowest point since 1971. The reason for this is that their mini budget was meant to spur the economy with more quantitative easing, or also known as pumping the markets with more money. This is what everyone in the world was doing back in 2020 when our economy looks like it was about to collapse. Governments all around the world pumped in more money into the markets to help save the economy, and it did help until we reached 2022 where we are right now, where this has actually caused high inflation across the globe. So because things have changed and inflation is just way too high in many countries, Federal Reserves or central banks across the globe have started to increase rates to sort of take money away from the market and control inflation. For some reason, the UK government believes that they can get away with this, that they can pump more money into the market to save their economy while at the same time controlling the inflation. Obviously, investors don't believe them, which is why the GBP has tanked. In the case of Japan, their currency dropped so much against the US dollar that their government actually had to step in and intervene. And when I say that they intervened in this, what I meant is that they have actually directly intervened in this situation by selling USD and buying Japanese yen to help prop up their currency. This is the first time that they have done this in a very long time, and according to Nikkei Asia, the Japanese government likely spent 21 billion US dollars purchasing the Japanese yen to help save it from freefall. This gave an immediate reaction. The Japanese yen actually started going up again, but it's of course not something that you can do sustainably in the long run. So what is going on with Japan? Most of the blame from economists seems to lie in the fact that the Japanese central bank is refusing to hike rates. Like what I said earlier, most other countries are almost forced in a way to follow what the US Federal Reserve is doing, which is increasing interest rates, and when everyone else decides to do so and you don't do it, then your currency is bound to fall. Imagine I'm an investor and I want to park a percentage of my portfolio in government bonds as a safe way to get yield. I have two options, which is putting it into a US government bond and getting 4% per year, or I can put it in a 10-year Japanese government bond and get 0%. As an investor, that is a pretty straightforward decision. Why would I buy Japanese bonds when I have much better returns with US bonds with a shorter time frame as well? So what do people do? They sell the Japanese yen, they buy US dollars just to get those US bonds. Now, I'm not smart enough and I haven't done enough research to understand exactly why the Japanese central bank is doing this, but it seems like the currency will continue to struggle until they decide to flip the switch. My best guess would be that the Japanese government actually has a lot of debts outstanding in terms of their bonds, and if they raise interest rates, they might not be able to make those payments back. So, for those two currencies who are performing exceptionally worse, even when you compare it against the Malaysian ringgit, then it's clear to see that if you don't kind of follow the flow, your currency will get punished. So that's it for today's educational video. This is more of an FYI, there's nothing much that we can do about it, but I just thought that it was super interesting for us to follow what's going around globally. I myself, to be honest, don't really follow this kind of economic news. It's very macro, very high level, and it doesn't really impact me as an investor. But I just thought that in this particular scenario, it was very interesting to see why the US dollar was going up so much against all other currencies and why the GBP and Japanese yen are struggling extra hard. Anyways, if you guys enjoyed this video, give us a huge thumbs up and subscribe to the channel if you haven't already. See you guys in the next one. Peace out.